Hey guys, welcome back to another video on the channel, and for this video I'll be showing you guys another 5-minute strategy that you guys can use to trade. And for this we'll be using the same super trend indicators except with other indicators such as the cumulative delta volume and the squeeze momentum indicator. And this one is quite an easy strategy to use. It will show you your buy and sell signals, so make sure to watch the whole video. But before we start this video, make sure to check out the link in the description box below. So the link will give you a sign up referral code which will link you to sign up for a FedEx exchange account. So the FedEx exchange allows you to trade crypto. So if you guys want to check out, you can trade all this crypto right here. And the reason that why I advocate for trading on FedEx exchange is firstly because when you put in money, you guys can get an extra 4% of the amount that you have deposited. So let's say you deposit $100, you can get an extra $4. $1,000, you can get an extra $40. And if you use the link in the description box below, you get an extra 1%, so total 5%. And next up, when you trade, look at your fee level. If you use the link in the description box, you get free VIP 1, and that is only 0.019% fees trading with FedEx. And having low fees is very important for scalping, so make sure to check the exchange out. But that is it. I'm going to get back into the strategy right now. So for this, we'll be using the super trend. We'll be using the super trend V1.0 buy or sell signals, and as you can see, we have our signals here. Next up, we want to put in the EMA, and we want to have it at the 200 EMA. And you can see here we have our 200 EMA, the white line. Next up, what we want is the squeeze momentum indicator together with the cumulative delta volume indicator, and there is the 4 indicators that we'll be using today. So let's get right into this strategy. Firstly, I'm going to show you guys how to take long positions and how to take short positions. So we'll start off with long positions. So first up, for you to take a long position, price must be above the super trend line and above the 200 EMA. So right here you can see price is above the 200 EMA and price is above the super trend line. Next up, there must be a green arrow appearing below the candle, and that is a valid position to go long if the squeeze momentum is bright green in color and the cumulative delta volume is green in color. So right here we have a perfect example. So let me show you guys. I'm going to take the position here. So if we look at the candle right here, the candle is above the super trend line, candle is above the 200 EMA, and we have a buy signal from the super trend signal. And we look at the squeeze momentum, it is bright green in color, and we look at the cumulative delta volume, it is bright green in color as well. Stop loss, you're going to put it at the EMA, and you can take a 1.5:1. So there will be a win, although it took quite long, but there will be a win. So I'm going to end it right here, and right here you guys can take another trade actually. So let me show you guys. Here you can see that I'm going to remove this trade for now, so that we have one win so far. You can look at this trade, you can see that price is above the 200 EMA and above the super trend line, and we look and we have a buy signal here. The squeeze momentum is bright green in color, and the CDV indicator is bright green in color as well. So we'll take that right there, and we're going to put our stop loss at the EMA, and we have a 1.5:1. So that will be another win, and as you can see, we are just following the trade, and we have another win just based on following the trend. So here is where we would not take another trade, and let me explain to you guys why we won't take this trade. So we have price above the super trend, price above the 200 EMA, and we have a buy signal. However, if we look on the squeeze momentum, it is dark green in color. What does this mean? It means that there's a decrease in the momentum of the trend, which means that the trend is weaker and we don't want to trade with the trend, and it is likely to result in a loss. So we're going to avoid this trade. Although this trade ended up to be a win, it is good that we avoid these trades because some of these trades may be bad trades and it's important to avoid them. So now I'm going to show you guys how to take short positions, and yeah, so let me bring you guys back to a short trend and let me show you guys. So very simple, we are basically going to use the same rules as we did for the long position, except we're going to flip it around and use it for the short side. So first up will be price has to be below your super trend line and price has to be below your 200 EMA. So there we have, both is below, and we have a buy signal here. And next up, we must look at the squeeze momentum. It must be bright red, and the cumulative delta volume must be bright red as well. So there's a winning position, stop loss at the EMA, and you take a 1.5:1. You guys can also take a 2:1 risk to reward ratio. Doesn't really matter, it just profits the same. So here we have another trade. You can see that we have a sell signal, price below the super trend, price below the 200 EMA, and it is bright red in color. CDV is red color as well, so we're going to take a short position there. Stop loss at the 200 EMA, and we take a 1.5:1. Another win. So let's look right here. We have another sell signal, price below both super trend and the 200 EMA. Squeeze momentum is red in color, bright red, and we have a red on the CDV indicator, so another entry to go short, and that's another win. You guys can take double positions if you want, but I don't recommend doing so. And what do I mean by double positions? Basically, you have another sell signal here and you can just take that position. So you can see here, this would be our first loss where we have a sell signal and the thing is bright red in color as well on CDV, and we have sell signal, price below super trend, and basically fulfills all our conditions, but that ended up to be a loss. But that is fine, because after so many wins, even if you have, since you have a risk to reward ratio of 1.5:1, even if you have a 50% win rate, it doesn't really matter, you still become profitable. So yeah, and now I'm going to tell you guys which trades that you guys should avoid. First up are those that is choppy in markets. Basically, like here, you can see that price goes up, down, and you want to avoid this type of markets because it's not very trendy, and this method basically revolves around having a lot of trendy markets. Next up, you just want to look for when price is always below a certain EMA. So right here you can see that whenever it drops back to the EMA, it rejects, goes up, rejects, goes up, rejects, which basically just means that price is very on a selling side, on the bearish side. So same thing for the long side, when it goes down, reject, goes down, reject, and you can see that it's very bullish, so you want to trade these trendy markets. But anyways, this is just a short guide on how to use this strategy. Make sure to try it out on your own and let me know you guys how does the strategy work. Check out my other videos as well, and thank you guys for watching. Goodbye.